What's up, everyone? It's Caddy with Money Investing. So we got some big news here today on Sunday after OPEC plus countries, including OPEC plus Russia, announced a huge supply cut in crude and Brent oil, and as a result, oil prices gapping up. It's not very often that you actually see oil price gap up $4 or $5 a barrel. So I'm going to go over exactly which countries are going forward with the cuts, what that's going to do to the oil prices, what that's going to do to inflation, energy stocks, and also Japan going around the sanctions and now very much interested in buying Russian oil above the ceiling, the cap that the U.S. put on it as a part of putting all these sanctions with the geopolitical tensions from Russia's invasion of Ukraine. So lots to discuss here. Hope you guys enjoy this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. If you're interested in joining us, did open up a few more spots. If you're interested in joining, getting access to all the buy and sell alerts, options alerts, trade ideas, and all the private videos, and of course, member benefits as well. So link's going to be down below. Now, this right here is the reports. OPEC Plus announces surprise oil cuts while U.S. calls the move inadvisable. So reading further, you'll notice that Saudi Arabia and other OPEC Plus oil producers on Sunday announced further oil output cuts of around 1.16 million barrels per day, so almost 1.2 million, in a surprise move that analysts said would cause immediate rise in prices, and the United States called inadvisable. So if you come over to the oil price right now, crude oil, you'll notice that it's now trading at almost $80 a barrel. We kind of closed last week at around just over $75. So at one point, this thing was up even more. It was up a little bit over 7.6%. So, we were trading as much as $81 per barrel. And since then, we have seen a little bit of a selling pressure, meaning that we are seeing a green day, but a red candle. So a red candle on a green day is something that's very normal. And this is the technical. So right now we're getting rejected exactly at where we have previously gone rejected at. But this is crazy, right? I mean, they've got so much control over the price with just these immediate cuts. They can bring down the price. With the immediate cuts, they can make the price go higher. With increase in supply, they can make the price go down. There's a lot of power with these OPEC plus countries. So oil prices last month fell towards $70 a barrel. That's their lowest in 15 months, which is actually a good thing for inflation. We've been talking about how oil prices have been coming down. So since the beginning of, I believe, May, June, around that time, since the beginning of June, you'll notice that prices have just been selling off 47-50%, coming down to their 15-month low. And on concerns that a global banking crisis would hit demand, still further action by OPEC Plus to support the market was not expected after sources downplayed this prospect and crude recovered towards $80 per barrel. The latest reductions could lift oil prices by $10 per barrel, the head of investment firm Pickering Energy Partners said on Sunday, while oil broker PVM said it expected an immediate jump once trading starts after the weekend, and expect the markets to open several dollars higher, possibly as much as $3 per barrel. And this step is unreservedly bullish. And this right here is going to be a list. So cuts actually start in May. The voluntary cuts start in May and last until the end of the year. Iraq reduced its production by 211,000 barrels per day. The UAE said it would cut production by 144,000. Kuwait announced a cut of 128,000 barrels per day. Oman, 40,000 barrels per day. Algeria cutting production by 48,000 barrels. And Kazakhstan also cut output by 78,000 barrels per day. So this is going to be a good representation with, of course, Saudi Arabia and Russia being the biggest, the countries with the most output cut. Combined, they make up a little bit over 1 million. And Iraq at around 211,000. We got UAE, 144,000. Kuwait, 128,000. Kazakhstan, 78,000, 48,000, and 40,000 for Algeria and Oman, respectively. Now, this is another really interesting headline, which also came out recently. Actually, I think today. Japan breaks with U.S. allies, buys Russian oil at prices above the cap. So what U.S. did back when Russia was invading Ukraine, was put a price cap on oil. What that means is they put a ceiling that no G7 country, no NATO country is going to buy oil from Russia at above a certain price, right? I think that cap was $60 per barrel. I could be wrong, but I have to double check. As far as I remember, it was closer to $60 per barrel. So in other words, no G7 country is going to be buying Russian oil at above $60 per barrel. But The fact that Japan is a member of the G7 is a very good ally of the United States is now going forward with potentially buying Russian oil above the ceiling, above the cap, which this article does suggest, and buying Russian oil prices above the cap definitely, goes to show that Japan desperately needs the access to Russian fossil fuels. So Japan got the US to agree to the exception, saying it needed to ensure access to Russian energy. The concession shows Japan's reliance on Russia for fossil fuels, which analysts said contributed to a hesitancy in Tokyo to back Ukraine more fully in its war with Russia. So quite interesting times ahead. And this, again, is going to increase some demand for Russian oil, and that's going to obviously put a little bit of an impact on prices in general. And all this is going to translate over to inflation. That's where it all ends up at, right? I mean, price hikes, supply cuts, buying above the price ceilings, everything translate over to what you pay at the pump. That's the bottom line. Because if oil prices keep going higher, well, what are the energy companies going to do? They're going to raise their prices too. And as a result, everybody at the pump is going to, once again, pay a higher price. So right now, we're still very range bound. Right now, we haven't really broken out of this December peak. December 1st, we were trading at around $80, $81 per barrel. So that is still a level of resistance, and we're not able to kind of break past that level. But if this continues, right, if it starts to break past $81, $82 per barrel, then the next really that target resistance is going to be sitting roughly at around $93 per barrel. And we'll be back to, October levels from last year for crude oil. So definitely keep a close eye. This is a pretty wild gap up in my opinion, and energy companies are certainly going to be doing a lot better tomorrow morning at 4 a.m. Eastern when the market opens. When pre-market opens, we're definitely going to see Occidental, Chevron, Exxon, XLE, Devon Energy, a lot of these energy companies, BP, Shell, all gapping up pretty aggressively when the day begins. And of course, it's going to be interesting how the day plays out and what type of cuts we can expect for the remainder of this year. So hope you guys enjoyed this video. Just wanted to do a very, very quick update. Right now, oil prices still range bound, still at that resistance at $81, $82 per barrel. And of course, right now, with a big gap here, RSI getting a little bit more on the overbought side, and support level is going to stay put somewhere around $73, $70 per barrel. So low 70s support, low 80s is going to be that resistance for now. Of course, if you get more supply cuts, then the price can go parabolic once again. So let me know your thoughts down in the comment section below. What are your thoughts? Comment them down below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. And as always, make sure that you also subscribe to the channel. And again, links are going to be down below. As always, happy investing. I'll see you all in the next video.